Alright, for this video, I want to go over the IRS Form 6251. So this is the alternative minimum tax for individual taxpayers, and it is filed by an individual with their Form 1040, 1040 NSR, or NR for non-resident taxpayers. Now, AMT is a very large concept in the U.S. tax space, so I want to cover it kind of on a high level, and then we'll dive into a more precise example, which is going to be the fact pattern that we're working with in this video. So I've got the 6251 here. It's part of the full 1040 for John taxpayers, so we'll take a look at the 1040 as a whole as well. And then in addition to this, I do have a sample Form 3921. So this is going to be the subject of this fact pattern, right? We have a corporation that issues an ISO to a taxpayer, and that taxpayer exercises the option during the year. So the corporation provides this form for their records, and it's necessary to complete their return. And then I also have one slide here covering some background on AMT, and then the fact pattern and the tax rules surrounding these ISOs. So just to kind of kick it off, high level, what is this AMT and why is it important to us? So AMT is designed to create this floor of minimum tax, right? So taxpayers, when you calculate your regular federal income taxes, so if we look at the Form 1040 here, if I jump to the page 1, when we talk about our regular federal income taxes, we're talking about, well, what's being reported here, and we have our AGI, our standard or itemized deduction, and then our taxable income. So what is our regular kind of federal income tax computed when we complete page 1 of the 1040, right? That's what most people are familiar with. The AMT is designed to step in here and say, well, if you had adjustments to reduce your taxable income, either exclusions from income, or maybe you had itemized deductions that reduce your income, for AMT purposes, we're going to be adding those things back. And so when we look at the 6251, what we see here is the starting point when we calculate our AMT income is our regular federal taxable income. So that's our AGI minus our standard or itemized deductions. And then we have certain add backs and other exclusions. So we add back things like the standard or itemized deduction. We have add backs for things like investment interest expense, NOLs, private activity bonds, right? So exempt interest from private activity bonds. And so in our example, what we're going to have here is an add back for ISOs, right? So on 2I, we have the exercise of ISOs. And so this is an adjustment which we're going to have for AMT purposes, but it otherwise does not impact our regular federal income tax computation, right? And so when we compute our AMT, then we calculate the alternative minimum tax amount in part 2. Again, I'll go into more detail on this after we go through the fact pattern, but this is the idea. The idea is you complete your federal income tax computation first, and then you check to see whether there's any AMT component that might apply. All right. So why are ISOs relevant here? So incentive stock options, ISOs, it's important to understand that these have different tax treatments for regular federal income tax, AMT tax purposes, even state tax issues. And so that's why it creates this AMT problem. So when we look at an ISO, what is an ISO? ISO gives the holder the option to purchase stock at a future date for a specific strike price. So for example, if we have Jane working for a corporation as its chief financial officer or CFO, and she is granted this ISO in January 2022, the corporation gives her this option to purchase 5,000 shares of company stock at a $50 per share valuation. Now, on the date that they grant her this option, the share price is at $50, and that's a requirement for the ISOs to qualify under Section 422. And then the agreement itself states that its intention to be an ISO under 422. The option expires 10 years after the grant date. These are all things that are required to meet these elements under the tax code. So why is this important? Well, when we are granted the option, that option has value, right? Because it gives us a future right to purchase the stock at a certain price. but the grant of the option does not require the holder to recognize any income. So in that example, Jane doesn't have to include any income for whatever she thinks the value of the option is because it's exempt. For regular federal income tax purposes, when you recognize the ISO, so when Jane decides to actually exercise the option and buy the stock, that also there's no income recognition event, right? It's only when Jane actually sells the shares does she have an income inclusion for regular federal income tax purposes. This is where the difference exists with AMT. So for AMT purposes, when Jane exercises that option, she has to include an income adjustment for this bargain element. So the bargain element is the difference between that exercise price of the share minus the market price on the day they purchase the stock. So in Jane's example, remember, she can buy it at $50 per share. So if the market price in 2 years appreciated to 80, she can buy an $80 stock for $50 per share, right? That's what the option gives her the ability to do. So the bargain element there would be $30 per share, right? And that is the piece that is the AMT adjustment. Again, no income recognition for federal income tax purposes, but for AMT purposes, you need an adjustment for that bargain piece of the transaction. So if we look at our fact pattern here that we're going to look at with the return and the 3921, we have John taxpayer. He's an executive with this corporation, so Fig Corporation Inc. He's granted an option to buy 1,000 shares of stock at $15 per share. The agreement meets all the requirements of an ISO under Section 422, so he's good there. And during 2022, he exercises the option to purchase 1,000 shares. Now, when he buys the shares, the stock price has appreciated significantly. Right now, it's trading at $49.06 on the day he exercises the option to buy the stock. So there is definitely a bargain element there. During 2022, John does not sell the shares. The total amount of cash that he paid to exercise the option was $15,000, right? And so that's $15 per share times 1,000 shares, right? That was his option. And then again, on the purchase date, the fair market value of the shares was $49,060. So $49.06 times 1,000 shares. So already he's in the money by a lot, right? Because he was able to buy basically $50,000 worth of stock for only $15,000. So the bargain element in this case is $34,060. Now, this bargain element not included in John's federal income tax computation, right? So if we look at his Form 1040, if we look at page 1 here, he's got his W-2 income from the company. He makes $125,000 a year. He's got some interest income there. But you'll notice nothing in here or on Schedule 1 are we reporting any income from the transaction, right? So there's no bargain element included in ordinary income. He didn't sell the stock yet, so there's no capital gain or loss element there. So this is all fine from the ISO perspective for regular federal income taxes. What changes is with AMT. So when we look at AMT, on 6251, we can see here that we have a 2I line item for an adjustment for the exercise of ISOs, right? So what is the difference between the excess of your AMT income over regular federal taxable income? Federal taxable income for that bargain element was zero, right? There was no inclusion. But for AMT purposes, we have to have an adjustment for $34,060. So when we calculate John's alternative minimum taxable income, we've got his regular federal taxable income there. We have an add back of his standard deduction, and then we have an addition of the bargain element. So $34,060 in additional income. So John's AMT income is $159,081. So once we have that AMT amount, how do we calculate any additional AMT tax that should be included with his return? So first, let's have a look at how his regular federal taxable income is calculated initially. So the amount of income he has, taxable income, $112,071, and per the tax tables, the amount of tax that he owes, just based on that figure, is $20,733. Now the AMT piece is designed to calculate, again, any AMT or additional tax that is owed after we make these kind of adjustments. So when we look at part 2 for the AMT computation, look at this chart initially to compute what the exemption is, right? So the exemption is, again, kind of that initial floor where you have to make over a certain amount to even have this AMT issue. And so in John's case, single filing taxpayer, his income is between, so line 4 is not over $539,900, right? So he's under that threshold. So the AMT exemption here is $75,900. On line 6, we go ahead and subtract the two figures, so $159,081 minus the $75,900, and then we get to our $83,181 figure. Now, carefully read these 3 bullet points, right, because that's going to determine how you calculate this AMT amount. But in John's example, because he doesn't have any capital gain distributions or qualified dividend income, and he's not filing the 2555 for the foreign earned income exclusion, he can reference this 3rd bullet point here, which says that if line 6 is $206,100 or less, multiply line 6 by 26%. So if John takes the 83,181 times 26%, he gets the alternative minimum tax, or the tentative minimum tax, of $21,627. Now, once you have this figure, then on line 10, you pull through that regular federal income tax that you computed up on page 2. Right? So remember, on page 2 here, the regular amount of federal income tax that he's calculated is $20,733. So if John takes his $20,733 amount and inputs that into line 10, subtracts the two values here, and his AMT amount on line 11 is $894. So what is happening here? The regular federal income tax, or the total amount of tax that John is going to owe, has to be increased by $894 because of these AMT adjustments. So because he had $34,000 in change in this bargain element of the ISO, he's got to increase his tax liability by the $894. So he's not getting a complete exemption from federal taxes for that ISO bargain element. So the ISO bargain element wasn't included in regular income tax calculation, but it is being added back for AMT. So when we look at page 2 here, we've got line 17, the Schedule 2 amount. There's this AMT piece, that extra piece from line 11 of the 6251. So the total amount of tax that John's going to owe is the combination of the two. So that's why we have the greater amount, $21,627. That's what John ultimately is going to owe in taxes. So he gets credit for the federal withholding, sure, but his federal income tax by this AMT adjustment has been increased by $894. So that's why AMT again is very important. In this case, kind of a small adjustment, not too bad. $894 isn't terrible for John, but there can be some really large variances here. It's actually quite common to see taxpayers that might not owe any federal income tax, regular federal income tax, but then they have huge adjustments for AMT. And so they do end up owing a lot of money simply because of those AMT amounts. All right, so that covers it for this tutorial. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.